The most common myth about reverse mortgages by far is that the lender owns your home after entering into one. This is absolutely false. When you get a reverse mortgage, you remain the owner of your home. And just like with a regular mortgage, the lender simply places a lien on your property so that they can legally have claim to the amount owed when the loan must be repaid. Now, just because you still own your home when you enter into a reverse mortgage, that doesn't mean that the lender can't foreclose, just like with any other mortgage. So, in today's video, we're going to go over what your obligations are in a reverse mortgage. And as long as you follow these few simple rules, this will ensure a foreclosure is never in your future. Hey guys, Taryn Proctor here with Retirement Home Equity Advisors. And before we get started today, I just want to ask that if you get any value out of this video at all, go ahead and hit that like button below and subscribe to the channel. We put out reverse mortgage content once a week, and by subscribing, it'll ensure that you're getting the most up-to-date videos as they come out. Now, I'm sure a good chunk of you watching have at one time or another heard a story or two about someone who lost their home to the big bad reverse mortgage lender. Usually that headline reads, "Reverse mortgage lender kicks poor Mrs. Smith out of her home that she lived in for 50 plus years." So first, I think it goes without saying that no matter what the circumstances are behind that headline, that is a very sad and tragic story. Anytime someone loses their home, let alone an elderly woman, is always a horrific outcome. But with that said, I take issue, as well as you should, with the misleading nature of insinuating that it was because of the reverse mortgage why the home was in foreclosure to begin with. Because the reality of the details behind that headline, in most cases, is that unfortunately, Mrs. Smith probably didn't pay her property taxes for 5 years, which is a reason any lender, not just a reverse mortgage lender, would foreclose on someone. And frankly, you don't even have to have a mortgage for that to cause a foreclosure to happen. And the reason we all should take issue with this is because it's stories like these that cause unnecessary fear towards the reverse mortgage product and really prevents people from even considering this as an option when it could greatly benefit them. I actually had a gentleman call in yesterday who saw one of our previous videos, just the sweetest man you can think of. But he had already spoken with a few other loan officers. And even though they all let him know the lender doesn't just take the home for no reason, he was still very fearful of this. One thing that I was able to do for him that the other loan officers didn't was break down exactly what his obligations would be and explain to him in detail that only if he did not keep up with those obligations would the lender have any right to foreclose on the property. So that's why we are going to go over exactly the same thing today. What your obligations are in a reverse mortgage so that you can see that first, they're pretty simple. And second, in many cases, they are no different than a regular mortgage. And certainly, they are no reason to fear this product. So, first and foremost, we'll start off with the one obligation that is different than a regular mortgage. And that is that the home must be and remain your primary residence. Now, this doesn't mean that you cannot travel or you can't go out in your RV and drive across the country for a few months at a time. It doesn't mean that you can't go visit family in another country for an extended period of time. This just means that if you leave the home permanently, that will cause the loan to be called due. So you can't go purchase another property and move out of the home and rent it out. I think this is fairly self-explanatory. The one instance where this may become a bit confusing is if you or your spouse may need to go into a medical facility or an assisted living facility. Now, if you are married and this is the case for one of you, nothing happens. As long as one spouse is still remaining in the home, that's completely fine. But if this happens to the last remaining spouse or you're not married at all, technically you will have 12 months before the loan will be called due. Basically, after 12 months, the lender will consider you being permanently out of the home. Now, when I say called due or the loan becoming due, what I mean by that is the lender will not just foreclose right away. And in fact, they will first give you the chance to rectify whatever obligation had not been followed. And then, if you are not able to, they will then call the loan due. They will say because of X, Y, or Z, the full amount of what you owe will need to be repaid by a certain date. And you will have a certain amount of time to repay the loan in full. Now, at that point, you can still sell the property to repay the loan and keep whatever remaining equity is left without going through foreclosure. But in the scenario we were just discussing, many people in that instance tend to sell the home anyway. Either way, this video is to help prevent the need for any of that in the first place. So, on to the next obligation. Number 2 is you must maintain payments towards your property taxes, homeowners insurance, and any other mandatory property charges such as like HOA dues. As I mentioned before, this is a requirement of any mortgage. And even if you don't have a mortgage, the county or even the HOA can foreclose on your property if you stop paying the taxes or HOA dues. This is nothing unique with a reverse mortgage. And further, this obligation is what causes many of those horrible stories you've heard about. And just to clear up something I hear pop up a lot, if you miss a property tax payment once or are delinquent a couple times, that isn't going to cause the lender to foreclose. Typically, the lender will pay the taxes on your behalf after them being delinquent for a significant period of time. Now, they will want that money back, of course, but I've seen a lender pay taxes on behalf of a reverse mortgage borrower for years before foreclosing. They give ample opportunity to help here. And I think it's also important to clear up the fact that lenders don't actually want to foreclose on homes. They just don't. That is a fallacy. Foreclosure proceedings are expensive and long and drawn out, and time is money to lenders. They don't want to do that. And not that it makes it any less tragic, but it's important that you know and understand exactly what, why, and how so that you aren't deterred by falsehoods. Now, lastly, and yes, we're already to the last obligation, you must keep the home in good repair. Again, another obligation that is similar to any mortgage and really is pretty self explanatory. Keep in mind that the collateral for this loan, meaning the only reason a lender is giving you the money for the loan in the first place, is because your home has value and that collateral needs to be kept in good condition. So that's it, folks. Generally speaking, when you hear about someone who is being foreclosed on while in a reverse mortgage and that person is still alive, it is because one or multiple of these obligations have not been met. So I hope that sheds some light on the sensationalism of some of the past stories that you've heard. And I hope this gives you all clarity on how this works. Now, if you or someone you know has any questions about reverse mortgage obligations or anything pertaining to reverse mortgages, we are here for you. Don't hesitate to give us a call anytime at 888-982-0475. We're currently licensed and able to help folks in Arizona, California, and Colorado. And just a reminder to hit that like and subscribe button if you found this video helpful and want to see more. Take care, everyone.